let's speak about Rivian Stock, baby. What is happening, investors? It is your boy Jack. I am not a financial advisor, and well, it has truly been an absolutely insane week or so for Rivian. So you are probably all aware that their earnings came out there, their Q4 results came out, and it's fair to say that people were not happy with them. They fell from about 19.50 a share all the way down to the 15s. They were making a slight recovery upwards, but ultimately they've come back down now to about 14.85 a share. And then just today, we got this piece of news. Their shares gain after pricing a $1.3 billion debt offering. Now, I spoke on Rivian quite recently. I spoke about the fact that I would like to have some sort of money in this company for the long term. And because of that, I've started following them a lot closer, and I've really been doing some actual digging into, you know, the most recent Q10. We take a look at some of their other debt that they've already accrued. I want to speak about what this 1.3 billion will actually mean for the company, if it's even going to have a big impact on them, if I am now more or less likely to buy shares in the relatively near future, and what this offering actually is. I mean, what this debt offering actually is, because it's something a little bit different that you may not have heard about this particular type of debt offering before. It's a green convertible senior note offering. So we'll briefly touch on that, why it's better than some debt offerings they've had to do in the past, and what we can expect to happen next realistically. So right before we get into that, my friends, could I please ask you to hit that juicy like button for your boy? It helps me out a lot. Drop me a comment down below. Let me know, how are you feeling about Rivian? I know I have a lot of Rivian bulls on the channel. I want to know how you guys feel about the last week or so. And please, if you do end up enjoying this video, hit that subscribe button for more content. Also, if you are interested in getting some free shares on Webull, hit the link in the pinned comment down below. Sign up, deposit $100. Get some free money. It really is that simple. Now, without further ado, let's just go through the basics of what happened. So they gained a little bit pre-market. As of recording, they're up less than the percent after they priced its $1.3 billion debt offering. So this is at an aggregate principal amount of 4.625%, which is a decent amount. Green convertible senior notes due 2029. So that's obviously a far way away. So we should be relatively happy about that, depending on what we're about to read further on here. But all a green convertible note is, it's one that's used for environmental reasons, essentially. So they can do this since they're obviously, you know, EV. They're looking to be greenhouse emission negative, etc., etc. So that's all that means. You can just consider it as any other convertible note, really, any other debt offering. They also granted the initial purchasers of the notes an option to purchase for settlement within a period of 13 days from and including the date the notes are first issued, up to an additional $200 million in notes. So the initial conversion rate is pretty much 50 shares of common stock per $1,000 principal amount of notes, which represents an initial conversion price of approximately $20.13 per share of common stock. And the initial conversion price represents a premium of approximately 37.5% over the last reported sale price of $14.64 per share of Rivian's common stock. So again, a decent thing for investors, especially when we speak here. And it says the notes will mature on March 15th, 2029, unless earlier repurchased, redeemed, or converted. Before December 15th, 2028, note holders will have the right to convert their notes only upon the occurrence of certain events. So, well, that means there's not going to be dilution anytime soon, which is a good thing for the company. If you do the maths, I believe this works out somewhere to be about 73 million shares altogether. If we go take a look at how many shares we have outstanding here, it's at about 883.4 million. So the dilution is considerable. What's that going to be? Approximately 7-8%. But it's not the worst in the world. And again, it's not all happening tomorrow, so we shouldn't be expecting anything crazy there. Also, if we go ahead and look at some of their other debt, this is just from their most recent 10K, I believe it was. They had total long-term debt here that was 2026 notes. Their effective interest rate was all the way up at 11.3%. So, I mean, this is clearly a much better deal than what they had going on there. Also, the notes will be redeemable in whole or in part for cash at Rivian's option at any time and from time to time on or after March 20th and on or before the 20th scheduled trading day immediately before the maturity date, but only if the last reported sale price per share of Rivian's common stock exceeds 130% of the conversion price for a specified period of time. So that is most of it, okay? They estimate the net proceeds will be approximately 1.286 billion or 1.484 billion if they take on the extra 200 million. That is the majority of what is going on here realistically, my friends. The company plans to allocate an amount equal to net proceeds to finance, refinance, make direct investments in, whole or in part, current and or future eligible green projects. That has to be the way due to the kind of notes they're using. Now, what does 1.3 billion really mean to Rivian? Well, total cash before this was at about 11.57 billion. We can see operating cash flow at -5 billion. We look at that Q4 results, we see fiscal year 2023 adjusted EBITDA loss of $4.3 billion. They do have a considerable cash pile as it stands, but I don't see this 1.3 billion, you know, being the difference in Rivian exploding in the next week or going to the ground. I don't see it having any sort of huge tangible difference in the next short period of time. I think it's fine. They're getting it at a relatively good percentage rate here, especially in comparison to the debt they have to take on in the past. Also, if we look at some of their other debts here, they have still access to this ABL facility, which essentially means they had a 750 million committed secured revolving credit facility. You'll see this a lot with companies with an annual interest rate between 1.25 and 1.75%, but that came down absolutely hugely, and they still have an availability of 343 million there. So that's one more thing they have going for them, thankfully enough. And again, one thing I like when I do look at this is a lot of these shares are held by institutions right now. And you can see Amazon's still there, 17.23% of the company. I mean, that is quite a lot of confidence they have in there at 158 million shares, my friends. 67.9% are held by institutions in general. You see BlackRock and Vanguard right up there as well, of course. Now, that's what's going on with the debt offering. Confidence is low in this company right now. So after the recent earnings, we saw 50,000 vehicles produced in fiscal year 2023, or that's what we're looking for. We were expecting, I believe, 62,000, and people have lost a little bit of confidence there. We are getting rumors, we've seen rumors that executives reportedly told employees that the ambitious production target of 62,000 vehicles is achievable, despite telling investors in a recent earnings call to temper expectations to about 50,000. I don't see why this would be true. If anything, you should be telling the investors the higher number. I know you might not want to let them down, but it's going to get priced in at one stage or another. Why not try and keep your share price up a little bit higher? You're already going to disappoint them at one stage, so it doesn't really matter. And then we've seen a lot of analysts changing what they had to say, okay? So Morgan Stanley cut its price target to 26 from 28, but kept an overweight rating. So, I mean, that's not bad at all, guys. You got to keep in mind, right now they're at 14.79. And you're going to see that with a lot of what is going on here. Wells Fargo said they're skeptical of their new target of positive 2024 gross margins, but they still have a price target of $18 a share, which again represents some very nice upside. Wedbush Securities brought it down to $25 from $37, which again is still a huge upside. You know, so despite the fact there's a lot of cuts here, they still do seem to think it's heavily undervalued. Baird cut its price target to 35 from 44. D.A. Davidson to 16 from 23, and RBC Capital to 28 from 50. Now, the thing is, guys, when we start to see a trend of analysts across the board continually cutting price targets, it's not usually a good sign, even if the price target is still considerably above, 50 to 100% above where the price is right now. I've seen it happen time and time again. It can just be a little bit messy. Now, me, as I said, I want to own some Rivian. Despite the bad things I'm saying here, despite, you know, the cash burn, all of the debt that they're taking on, the fact that, you know, this is not going to be enough to keep them going for years and years and years. It is good that it's not going to be any dilution anytime soon. That's one positive we can definitely take away from this. But right now, they're at all-time lows. They are clearly downtrending. Maybe if you want to start the position, you can. I would go slow and steady. Me personally, I'm going to wait till things are looking a little bit more solidified, a little bit safer in general. There's just too much uncertainty here, and you know, if I didn't have as much money in high-risk companies as I do, then maybe I'd be more willing to go for it. But as of right now, it's not quite for me. Also, just really quickly, we will point out that the short percentage of the float as of mid-February was at 9.82%. we could see something happen there, my friends, especially with institutions holding so many shares. If people get behind them and if there is a big run upwards, you could definitely see a 10-20+% day for Rivian in the near future. But again, if you're going long term, I don't think that'll matter. But if you're looking to trade it, keep your eyes peeled. But anyway, my friends, that is my updated thoughts on Rivian as of right now. Again, they are going to have to raise more capital, so getting it at a good percentage here for a green convertible senior notes as opposed to a bad percentage such as the ones they had previous is a good thing. If you watched all the way till the end, you, my friend, are a true legend. I really appreciate you from the bottom of my heart. Your support means the world to me. Please, again, hit that like button, drop me a comment down below, and subscribe for more content. Also, you'll see I use Seeking Alpha for the large majority of this video. It's the only company I actually pay for. It's where I get pretty much all of my information, and I am working with them as well. That will be linked in the description or the comment section down below. If you want to sign up, you can get 50% off your first share. It's a really good platform, honestly. And also, if you do want those free shares from Webull, that offer is still there for you as well. So, anyway, guys, I hope you all have a beautiful, blessed day. I'm going to see you for another video very soon. Peace.